Hey guys, welcome to this video. I'm following on from this morning's live stream, and I'm just going to cover the DXY, the DXY, the dollar index, as some know it. And the reason why I'm doing that is because really it's the easiest way to track the currency market if you're looking at things that are the euro, the pound, etc. The euro is heavily weighted against this, so pretty much this is the opposite of the euro against the dollar. Now, tomorrow, there's the FOMC meeting, CPI data, Bank of England news, Canada news. There's tons going on. So we really need to be prepared for it. We want to look at what we can see. Now we're going to start on the monthly. Okay, it's the highest time frame generally that we look at. And first of all, we're going to look across to the left-hand side because the rally we saw before, it was something that we hadn't seen for a very long time. And for that reason, you know, if you look all the way to 2007 financial crisis time, you were way lower down, and the dollar index comes all the way up to 113 or so, okay, 114 and a half. So if you look to the left, you get an idea of levels that are more comfortable for price action or bounces. Now, in some of my videos, my analysis, things like that, I was talking about this as a key level for longs. Okay, many of you who follow me a lot took that. Okay, you like my price action calls, and you saw that bounce. And if I swap to the weekly now, drop the time frame, you can see it just curls over. Okay, it's like a bit like a hill, and then it just comes straight back down. Now that gives you your first indication that that is weak. Okay, the rejection on this is very, very early. If you bring out a fib level and you whack it down here, you can see you're not even coming up to 38.2. Okay, you're about halfway between 23 and 38. So hardly any strength there. Now, once you get back to this level over here, curling back onto your 100 MA, still this candle's weak. And all this is showing you, okay, there's no market sentiment for the dollar to really pull this higher. Okay, so that is an issue if you're trying to take this long because you're just trading into weakness. Yes, it was a key PA level. Yes, you've got your bounce, but really you're coming straight back down. Now, the best way to trade this risk averse, however, don't get me wrong, if you're more advanced or you're a day trader like myself, you might take that lightly long. But otherwise, if you're a risk averse trader, okay, you may be slightly more new, you can look slightly lower at PA levels under that previous wick because most of the time when markets fall off extremes, they have to break down each level. And the level we saw first really wasn't very significant. And you can see that because the market falls straight away. So ideally, if you're, as I said, risk averse, you're maybe a bit newer, you want to get nearer those other key MAs that I've got just hanging around here. Okay, if I just pull my list down, it says that. So this really is your new long zone. I like it long around 99, just under 100. You would really need some market sentiment tomorrow, probably, to pull you to that, and you can start to scale in. Now, in terms of your size, it's a good idea to reflect on the previous up move to get an idea of the validity of the market value. Now, you can see what I was talking about coincides with the 0.618. Remember, we're not doing fairy magic here. Okay, we're not interested in wizards and dungeons. It's not about any of that. You're just looking to say, okay, 62% of the move, that's a fair deal. It's not really far down and a low price. It's not really high and a bad price for longs. It's somewhere just over the middle, and it's coinciding with KMAs, and my stochastic oscillator is pouring down as well. Okay, so flicking down to your weekly again and then to your daily, that really is shown here. Look at all the pushes. Look at that. Does that look strong to you? Does that look like a strong push each time? The answer is probably no, because you're just whacking off this early MA. This 20 MA is just pushing you down and down and down. And that is why it wouldn't be surprising if you break this. Okay, now that doesn't mean sell it. I'm not saying sell it until you get to 99. It just means I would prefer it long at 99. And it's a far better position to be in if you're someone who's a risk-averse trader. And you'll be approaching this 200 MA. Your 200 MA will start to close up slightly and get nearer that point when you get there. But it's just going to require some harsher market sentiment, and your kill zone is going to come anywhere around here. In my opinion, that's how it's going to work for the Dixie in the near term. So I hope that helps, guys. As always, do go ahead, go underneath, get my free updates, and start changing your trading today. Thanks for watching, guys. Hope that really helps. And of course, I will see you as always in the next one.